It's official, the dam has broken. This morning, January 14, 2026, the United States Mint took an unprecedented step, a total suspension of silver numismatic sales. The official excuse, the inability to accurately price products due to extreme market volatility. But make no mistake, this isn't a math problem, it is a confession. The government is admitting that paper prices no longer mean anything. Silver just gapped past $91 an ounce in a historic breakout, and the US government just closed the shop. They cannot sell what they cannot source. The physical silver market is in a state of technical default. Look at the charts from this morning. This wasn't a gradual climb, it was a violent explosion. Silver opened with a massive gap, obliterating every resistance level to hit $91.50. At the same time, gold is testing for $1,650. But it's silver that is breaking the machine. The bullion banks, who have held massive short positions for decades, are being liquidated in real time. The gold-to-silver ratio is collapsing. The market is no longer trying to guess the future price, it is hunting for real, physical metal. When the US Mint says they can no longer set a price, they are telling the world that the US dollar is no longer a reliable unit of measurement for physical silver. Why is the US Mint paralyzed? Because it relies on a just-in-time delivery system that just blew up. To strike silver eagles, the Mint needs silver blanks, but their private suppliers are failing to deliver. Why? Because tech giants and AI infrastructure firms are paying massive premiums far higher than what the government is willing to pay. Internal Mint memos suggest that registered silver inventories are at 30-year lows. By suspending sales, the Mint is protecting its last remaining strategic stocks. This is rationing by another name. If you were looking for 2026 eagles, you are now facing a wall. Dealers are reporting 8-week delays and prices north of $105 per coin. We are witnessing the great decoupling. On one side, you have the COMEX and the LBMA trying to maintain a facade of control with paper contracts. On the other, you have physical reality. In Shanghai, silver is already trading at a 15% premium over New York. Investors no longer want receipts, they want bars. The physical delivery volume on the COMEX in just the last 2 weeks has matched what usually takes an entire quarter. Banks are short nearly 2 billion ounces of paper promises, while there are only 140 million ounces of physical metal available for delivery. This is a mathematical impossibility meeting a physical reality. This is all happening as Treasury Secretary Scott Bessent designated silver as a critical mineral earlier this week. That was not a coincidence. By changing silver's status, the government has given itself the power to requisition stocks for national defense and strategic infrastructure. The rule change we warned you about is here. The free market is being suspended in favor of a resource war economy. The US Mint isn't halting sales by mistake. It's halting them because every ounce of silver has become a matter of national security. The signal is clear. When the government stops selling, it's because there is nothing left to sell at the quoted price. Silver at $91 is just a pit stop on the way to triple digits. If you are waiting for the Mint to update its prices before you buy, you might be waiting for a product that never returns to stock. The 30% or 40% premiums you see at local coin shops are end price gouging. That is the actual price of silver. The paper system died this morning in Washington. We are entering an era, or owning physical metal is the only proof of wealth. Do not be the person holding a receipt for silver that doesn't exist. Secure your position. Get out of the banking system. Stay in the physical. Subscribe to Survival Economics to track this US Mint default and the climb toward $100. Stay vigilant. I'll see you in the next report.